Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Tuesday, July 8th, 2025. It is 10:03 a.m. Eastern Time as I'm starting the video, so we're about a half hour into the trading day. And what I'm going to do in this video is share some trade ideas. So let me make this a little bit bigger. And also in doing that, I'll go over some of the, let me return that back to where it was. One second. I'll go over some trade ideas as well as some new ones. So let me start out as I like to do, going to the recent comments. I encourage you to come into the site, particularly if you're interested in any topic below a certain post or video. But quite often the questions, and I'm fine with that, aren't always related to the post above. Some people ask for updates, new trade ideas, opinions on charts. So I'm just going to share the recent ones I replied to today. Somebody asked for a post on QQQ and ES levels. ES are the S&P 500 futures. And so here's the charts, and I'll share them with you here. You can, of course, go and check these out. This is a 60-minute chart, just showing a, it's a clean, what I call clean chart. Just a nice, clean 60-minute bearish rising wedge pattern, complete with the, what I like to say, the requisite or, desired divergences. So that makes it a divergent high right there, negative divergences. And so just like the daily chart I'm about to show you again, this is a 60-minute chart, can get a jump on. We're in a course of resilient uptrend that they've been buying every dip lately. Momentum continues to wane, and again, that's what these guys down here tell you. These are your momentum indicators. When prices continue up, a healthy advance, prices are going up, and your momentum indicators are going up, making higher highs. And then at some point, momentum starts to slow. Think of I like to use the analogy of throwing a rock up into the air, right? You throw a rock into the air, you're going to have acceleration out of your hand. Then it decelerates to the point where for a split second there, it's just suspended. It's not going up or down, but there is that deceleration as gravity starts to kick in, it drag against the air as you're throwing it up and all that. And then it comes back down. And so think of that's similar, and that's how these momentum indicators are used, and especially when you pick up the divergences, when the momentum indicators start making lower highs and prices are still making higher highs, and that's usually when trend changes and corrections come. So either way, and you can see I have a confluence of these are all support levels, and they're in very close proximity. So that's what I will call a target zone. So that's it. And I'm going to show you the notes that I made on the first, on the daily chart here. So this is the daily chart. Here, let me pull a live chart. I just made them this morning, so there's no change there. So again, this is what it looks like. I will say I'm not super duper crazy about this uptrend line because it has the minimum number of trend line or reactions that I like to see, which is three distinct reactions. You had one almost right there, and then you had one here. The more reactions on a trend line or horizontal support level, the better defined it is. And in my theory or my reasoning behind why it works so well is the more eyes that see it, the more reactions you have, the more obvious it is. So this one I think is obvious enough. And again, it takes nice shape and form of a wedge. We had a divergent high here, and we hit that's when we hit that second target. I give you 3 short-term targets. I've only had one single short trade on QQQ since we took out the 200-day moving averages. We were scaling in for a long-term position here, which is still very much in play, and I addressed that right here. And then we had that one little pullback there. Here, I'll show it to you. We hit that second target in the pre-market session right here, which was also a pullback to the 200-day moving average. So we shorted in advance there, gamed that, hit T2 bounce. I later on added these targets, which still could come into play very much so. Or you can look at the chart I just updated right here. This is the daily chart. And so that's that same first target zone. Again, if you go into that post, those 2 charts I put in the comment under, it was I think the last post from yesterday, you'll see the targets here. So T1 zone, because you have all these various support levels in close proximity. I would say probably go down to the lower end of it would be my expectation. As I've often talked about and said repeatedly recently, quite a bit, is that when you break out, there were your previous highs. This is a breakout to new highs, a breakout which ultimately I do expect to fail. I expect it to fail before it even happened. Anticipated that if we go on, I said equal odds it will punch through, make a marginal new high. I've been saying that for weeks or months now. And then if it does, it'll probably fail. Now, however, it may not fail. I could certainly sit here, and I know 99% of the investment community, the pundits and various websites are making the bullish case now. So for me to do that, if you believe in it, go trade it, and I'll tell you how to trade it. And part of that is you can expect, I think, a back test would be likely, again, of a breakout of these previous highs. And from my experience, you sometimes do get a perfect back test. But more often than not, they come in a little bit down below the previous highs. And what that does, it kind of blows out the stops, and sucks in some new shorts. And then you go on. So if you are longer term bullish, you could buy down maybe to the bottom of that T1 zone. I would not keep adding if we go below it, and maybe set your stops somewhat below. And if you're bearish, again, those are your targets. You can take some profits there. I'm sure there'll be some buyers that come in somewhere in this range, most likely. And if that's taken out, the way my targets work, upon the initial tag of each target, a reaction is likely. And once you take out the bottom of the target, especially ideally after a reaction, it opens the door to the next target, T2, T3. And then as I put down here, the odds for my longer term weekly targets being hit will increase exponentially if and as QQQ drops below this trading range, just when I have boxed in here. So you've got these little arrows increasing, in the brightness. And so why? Well, one of the reasons is, if you look at everything, if we get down there, we'll have lost the 200s again. And we know what happens. I've talked about it repeatedly before and after and while it was happening here. Those are key levels that both man and machine come in and trade hard around. In other words, in a bull market, traders and the algos of computerized trading programs will buy pullbacks to the 200s. And when the 200s are lost, they get sold. Sell or sell. That's a bearish event. And if you rally back to them in a downtrend, then that's an objective short entry, as was highlighted back then. And right here as well. Now we took them out. We gapped above them there. Clear breakaway, that bullish gap. And so that's why when we're in that range, when I had you bounce target zone, I said no more shorts above the 200s. And again, that's for the long term. Just to be very, very clear, we have some different time frames on trades sometimes for the same security. Sometimes that security will be the indexes like QQQ. These are the longer term targets. Remember, these are long-term targets that were set in place back in 2024. We hit my second target there. We bounced as expected off T2 and hit T3 here. At the time, made it clear, no more shorts, covering all shorts, go to full long position, i.e., in other words, expected another bounce. Bounce carried a little higher than initially expected. And so again, if we lose the 200s, it will significantly increase the odds that we're going to go down to my deeper targets, which I still maintain. But my brain's wired in like a real-time probability scenario. I always use that analogy. Again, I'm not a big gambler, but I did go to the Kentucky Derby once and watch the horse betting, and I bet dogs a few times before they banned dog racing down here in Florida. Back in the days, this is decades ago, and watch the real-time odds on the board change until the race begins as the bets are coming into the house. So the house is bouncing out. And so it's the same way for me in, where's my 60-minute chart? Where do we go here? Same way in technical analysis. So that's how it works. Let me go back to the daily here. Sorry, guys, toggling around. So, you take this level out. So when I say moving down through here, any, brief dip below, you've taken out the 200s. Sometimes you undercut them. It's not uncommon to see an undercut of the 200-day moving averages followed by a reversal, and that would be bullish. But if and as incrementally every tick lower and every day longer you're down below the 200s, increases the odds that that breakdown is going to stick, and then you're going to have more downside. So that's why, and so that's kind of how I look at it here. So if you do think this market has, considerable more upside this year and or maybe next, let's say, 10, 20, 30% or more upside in it, then that would be a great buying up, a pullback to the 200s. But you need to recognize that if we break them, it's probably going to, again, in my opinion, will sharply increase the odds we're going to those longer term targets. And if you are in that mindset that we are going to those targets this year or next, probably this year, then that's where you would increase to more aggressive or full position size. Full being whatever part of your portfolio that you allocate that bit of the piece of the pie to. Remember, I'm a huge proponent about asset allocation and diversification, even in a trading account. That means not everything is, full position on QQQ is full, whatever you want to be. If you want the markets to be half your portfolio, that's fine. That's pretty aggressive. At the same, any point in time, I'll usually have gold, silver, GDX, or crude oil, natural gas, agricultural commodities, treasury bonds. Those are the other pieces of the pie, and those may be long or short depending on the outlook. And the way it works, it's just like investing. It's just the whole premise of buying an index fund, the S&P 500, because at any given day, some of the stocks are going to be up, some will be down. Overall, if you're diversified enough that you should have some winners to offset any losers. And it's healthy overall, but it also helps in trading when you're leveraged up, maybe trading more aggressively from a psychological perspective, not to see that big down day. If you bank everything on a, gold long position, gold mining stocks, on any given day, you're going to be very happy or very unhappy because they're volatile. And so I'll try to get to that in a second, GDX, but I want to, and I'm still maintained, I might have to cover that in a separate video. I started to put together a chart for you today. Let me see if I have it here. On Bitcoin and the US dollar. Here it is. And then I wanted to get the Carnival trade out to you. And I want to do this video because I want to cover the that sector, or the ETF that covers that sector, PEJ. It's a leisure and entertainment ETF. But you can see here, I always, over the years, have talked about the correlation, or what we call really an inverse correlation, opposite movement between gold and the US dollar. And again, it's a mostly on relationship, and it's simply because gold is priced in US dollars. So if the dollar goes down, it takes more dollars to buy an ounce of gold. So if you can freeze supply and demand, that would be a perfect, correlation there. There are times where there's a strong demand, but Bitcoin works the same way. Bitcoin's really nothing like gold. Gold is only valuable because we say it's valuable because our ancestors before us, our previous generations thought it was valuable going back hundreds and even thousands of years. And so Bitcoin's kind of the same thing. It's really nothing. It's a bunch of bits and bytes, is all it is. And but you can see here for that same reason, and this goes in reverse. I just have the up arrow showing the rallies in the dollar here, and you can see GBTC only because it's been around. It's the only ETF-like instrument that's been in Bitcoin traded for a while, so I can go back several years. All the rest just got the official approval last year, and so you don't have the long-term track record, but it's going to track the price perfectly. And you can see the big run-ups, and then look really for the inflection points when the dollar turned, changed trend, and the big moves in the dollar. You can see this was the biggest rally in the dollar in many, many years, and you also, not by mere coincidence, had the biggest drop in Bitcoin. Again, Bitcoin in white. And even the little, again, you can draw the arrows the other way. It just, the chart gets very confusing. So when you don't see, the dollar going down, it's going up, and then, I'm sorry, this is the dollar down, Bitcoin up, right? All right, so you get the point. You can see the arrows. You can just freeze this video, pause it, and if you want to study that chart, maybe I'll probably post it later. I want to move on to Carnival. So I put up a video. I didn't watch the whole video. It's too long. You could take your time watching it. I've been seeing this stuff on social media and getting, hearing about it. We're following my news feed. Carnival, in fact, just implemented a bunch of changes on their cruises. They're trying to crack down on the, just the kind of the people that have been coming on the cruise, just low class. It's just like Spirit Airline. If you've watched social media, Spirit Airline was known for their super low budget fares, and ultimately the airline went bankrupt. Now, I'm sure there's other nuances, and maybe they're pricing things too cheap, but you're trying to get such a budget crowd. I mean, let's just speak realistically here. When you go with those low price, budget fares. If you've ever flown Spirit, you know what I'm talking about here. Okay, you're going to get the people on the plane that aren't going to buy the drinks. The $7 beer and Bloody Marys and all that, and the extra meal service and all the upgrades, and check a bag for 40, $50, whatever it costs, or whatever it takes, it's going to get crammed in there. So what happens is all those ancillary charges and costs that the airlines, where they really make their profits on, you're not going to get that. So think of it the same way. This is, again, I'm speaking fundamentally now. So if Carnival has gone to this budget model and attracting the wrong people, they're not going to buy. I know most cruises, a lot of things are all inclusive, but not really all inclusive. Certain drinks, certain things at the bar, certain things in the gift shop. So to me, it's first and foremost, as always, I have to see a chart. I have to make a case to buy or short a stock in the charts. And so the reason I gave you the link, and again, you can read those comments. I've been reading about it for a while, and Carnival just implemented a lot of new rules on there. And to me, I think the damage is going to be done. You know how things are in social media. So people that are going to be looking in and researching doing cruises, I think it'll be reflected in their next earnings. Here's the next earnings date up here. We'll start to see that and going forward. But again, it's like any other trade, guys. It either works out or it doesn't, and then I move on to the next one. I don't even think twice about it. There may be zero follow-ups on this trade. If this thing just goes on through here, as I said earlier on that post I gave you, stop should be commensurate with your price target or target. So if you're long-term here, you can see right now I have a final target of $15, and that'd be a 50% drop. So you can easily allow for a 15, even 20% stop loss if you're going for that target. If you're only going for T1, the bottom of the zone comes in with a trend line. I'm kind of favoring the bottom of the zone. That'd be a 35% drop. So a 12% stop loss would give you about a nice 3-to-1 RR, risk reward ratio, which is good. So, and again, if you want to get kind of hone in on the levels, this is the daily chart. There's the trend line break. It happened yesterday, this nice clean up trend line. So that's the objective entry as well. There's multiple ways. When I short a stock, it's either objective to short a rally into resistance if you expect that resistance level to contain and cause a pullback or reversal in the stock, which I do. Why? A lot has to do with the big negative divergences that you have here. That something happened. There it is. These are the negative divergences on the weekly. That tells me we're overbought. You can see here on the RSI with negative divergences at really nice resistance. Okay, I don't want to harp on this one too much because I gave you the post, gave you the charts. I think I'm over making the case now. It's pretty simple. It either works or it doesn't. That's it. So I like this one of my favorites. And then I'm going to roll into PEJ. Started looking at these really about last week. And so I was going through more of the components yesterday. PEJ is the Invesco Dynamic Leisure and Entertainment Portfolio ETF. So you have companies like Booking.com, Royal Caribbean, Airbnb, even some restaurants in there, Chipotle, stuff like that, right? So things that you're going to, think of this is disposable income. There's two types. In the S&P 500, you have 11 sectors. Of those 11, two are you have consumer discretionary and consumer staples. Those are two different sectors. Staples are things you need, toilet paper, toothpaste, stuff like that. And that's consumer staples. No matter what happens, a recession, you can lose your job, you're still going to buy those things. And then consumer discretionary are things you want, the luxuries. And so this kind of falls into that. You don't have to go out and drop $200 at the restaurant, on a bottle of wine, a couple nice drinks, steak dinner for you and your wife, and whatever. You don't have to go to Las Vegas and gamble. You don't have to take a vacation, rent an Airbnb. So this is when things are booming, and so we know, it's been doing well. In the past, we've traded this. We've had many trades in the past on PEJ. I can't remember if I would have probably did, if I can't recall, probably highlighted here with that nice, beautiful little bearish rising wedge pattern breakdown there. The secondary trend line was broken there, and then that ended with divergence here on the RSI. and that's when we were covering all shorts and all categories and going long. That was the April 5th lows. So we've come full circle, guys, what I'm showing you here from a technical perspective. And this is one of my favorites. If you are interested, it's a kind of ETFs are like what I call one size, or one and done. You have exposure. I'm going to go through the components right now, and that way if there's any individual stocks you might want to short, you want me to give you additional price targets, if I don't give you specific targets on these, feel free to ask me. But if you want this ETF, consider it a trade idea. Right now we don't have a sell signal on it yet. My confidence is pretty high that a breakdown's imminent. So I personally shorted CCJ today, got that post out to you, took a starter short there, and I'm probably going to add in some of these individual stocks or this ETF. Again, I have various accounts, longer term, active trading accounts. Targets right here, 54.63. And remember, all my targets are always the actual. I'm going to move that up a little bit, actually, about 55. And those are the actual support levels where reaction's likely. You always want to set your buy to cover limit order a little bit above that. That's only about a 5% drop to the first target, about an 8% drop to the second target, 11.5% there, and down here, 19%. This is what I would call my preferred. Well, right now, look, let's just say right here, this is a sweet spot, a high probability target, 51. In other words, I have no interest if I take this, especially in non-active trading accounts, typical swing accounts. I'll most likely ride out any tags of the initial targets, ride out any counter trend bounces, and this is where you're coming in. I think that's really nice support, about $51. Maybe I'll move it up a little bit now. Call it 51.48. You got the 200-day moving averages and everything. So, in a nutshell, I'm looking for at least a 10% correction in this sector. Quite possibly a lot more if my longer term targets on the market play out and we start to see things really roll over and get some traction here. This is just the weekly chart of it. All right, now I'm going to rifle through the components. As always, when I load an ETF or a sector, I have a list of the components will load up next to my chart. You don't see it in here. I just showed them to you. I'm going to click through in that order, and they're also sorted by market cap. This is booking.com, BKNG. There it is, our Booking Holdings. It's the actual name of the company. Crazy about the trend line, but big divergences. There's a primary uptrend line right here. It's a likely target for the stock. And this is RCL, Royal Caribbean. The cruise lines, birds of a feather, guys. You can put these charts up. CCL, I happen to be my top pick for the sector for the reasons I cited fundamentally before and technically, but I think all these cruise lines are really getting stretched here. And God forbid the brakes start coming on quick to the economy quicker than expected, which I think is what's going to happen. Will be a sudden kind of repricing of assets and things like this. Again, these are cruise lines. That's dispensable income. You're doing well. You take the family or yourself and your spouse or wife or significant other, or whatever. These guys don't fare well during recessions. Airbnb, we've known, there's whatever. I'm not going to comment fundamentally. I'm not an expert there, but I do follow trends. I know that across the board, I live in Florida. We see a lot of a tourist-dependent state. We're seeing this from everywhere, from in the Florida Keys. I'm seeing Spain protests. I have one of my kids over and doing a summer session for college over there. They're very anti-tourist right now because the locals can't afford a house because rich, Brits and Americans, everyone's coming over and buying up all the property over there, turning them into Airbnbs. There's a problem here. One reason there's a shortage in the housing market, and then you have markets that are starting to get away from that by, implementing local municipalities and areas are saying, no more daily rentals or even weekly rentals. Some are now going to monthly. Either way, Airbnb stalled out. And look, I don't have much of an opinion on the chart. Certainly not one of my favorites from looking at the chart. I just want to say that it's in that ETF And I'm just showing you, I'm going to go through the rest of the names. CMG, the Flying Burrito, Chipotle, Mexican Grill, big divergent high, second divergent high. No divergence, but we're about to make a high level bearish PPO crossover. We just kissed the 70 level, which is overbought on the RSI. I've talked about this quite often. In a bull market, overbought, don't try to short it. You will lose money. A bull market overbought tends to become overbought, more overbought, or stay overbought for an extended period of time. But in a bull market, oversold, you want to jump on those oversold readings. Those are the times, I'm just hitting them all here. You want to step, oh, that was a bear market right here. In a bull market, a bull trend, oversold is usually one and done, very fleeting. They're good buying opportunities. The same thing flips upside down in a bear market. Once a bear market is established. In this one, only time will tell, but that's what it appears. We're in the early stages. This was a divergent high, big divergent high. This stock, by every metric and technical analysis, is in a downtrend since mid-2024. Downtrend simply defined as a security making lower lows and lower highs. So if it gets rejected here off resistance, price and 200-day resistance, we go on down, make a new low. That's going to be a confirmed downtrend. And I wanted to point out that we just hit 70 on the RSI. So if we are in the early stages of a bear market in this stock, then this will most likely head down from here. Again, not one of my favorites. I shared my favorite with you today. That's why I got that out there as a trade idea. I'm doing this to kind of just show you what the whole sector looks like. I haven't even marked up a lot of these charts, or at least not lately, so I'll be doing that right now as we go through the video. This is Hilton, HLT. Most of you, I'm sure, are familiar with that brand name. They're all singing the same song, most of them, at or near new highs, like the market, with negative divergences. Some that are sucking wind, you might want to ask yourself, like Airbnb, why is the stock peaked years ago and not down? And in this market, if you're not, doing well, what's going to happen in a bear market? So Hilton is, just eking out, just like the stock market, a marginal new or an equal high, but with negative divergences and overbought conditions. And there it is. SYY, Cisco, that's Cisco, the food truck company. By the way, I just got a price alert on Cisco, the tech company today. But this is you see the trucks going around. They provide tons of, a lot of, probably in this area, it seems like almost every restaurant gets their food and other products from Cisco. But just showing you what the chart looks like. I really didn't have it marked up. But again, this is a stock that peaked back in 2022 and has not been participating in the market like the other tech heavy Cisco, which right here I just got an alert on today. So if I'm sharing, I'm going to tighten that, I'm going to tweak that trend line, and so my alert hopefully will reset. If not, I'm going to set it right there. Call that a short setup. Negative divergence, rising wedge, divergent high. Let me borrow you, duplicate. Nope, tried to duplicate the letters. There it is, and that's it. So break of that trend line will trigger a sell signal on that one. All right, back to PEJ. I didn't mean to digress, but I just wanted to, because I got that alert this morning, came through on CSCO. So we're back to SYY, the other Cisco. That's what it looks like. WBD, Warner Brothers is in there. So see, this is kind of an eclectic mix of stocks. If you want to zero in, we have there's an ETF that will only short restaurant stocks in particular. There's one for casinos, or used to be. I think it's BJK. I'm trying to remember. So you can get more granular or more specific targeting this sector. PEJ, again, is well-rounded, like I'm showing you with cruise lines and Airbnb and Cisco, and in this case, Warner Brothers Discovery right there. But there's a trend line. Another stock clearly in a bear market. I mean, there's no arguing that, no matter who you are. The stock peaked in 2021, and it's closer to making a multi-year, multi-decade low right now than a high. Fox, getting a little stretched. Already broke down, back tested and below the primary trend line. Expedia peaked right here with the divergent high, and doesn't look so hot. Domino's, Hilton. I'm just rifling through them, guys. Like I said, I didn't mark up all these charts, but you can see a lot of these guys have already peaked. And so those cruise lines, I think, offer some additional opportunities. I think they haven't gotten the memo yet that consumers really rolling over, as evidenced by a lot of these charts that I'm showing you here. This is Hyatt. So there's Hyatt. That was a beautiful bearish rising wedge pattern, right? Nice clean up trend line, breakdown. Then you lost the 200s. This thing didn't look back. But like everything, they stepped in, bought. It wasn't random. It hit nice support at the lows. And it's moved up, but we've come full circle like so many other things. By that, I mean we now have, for the first time since earlier this year in both the markets and many stocks, negative divergence right now, which you didn't have before. So there's your uptrend line, little wedge pattern. Texas Roadhouse, no big opinion there. MMYT, Make My Trip Limited, broke the primary uptrend line and back tested there. It's been moving lower, but like a lot of stocks, it's not really caving in. It has broken down, breakdown back test. It's below the 200s now. If the sector rolls over and the market rolls over and this one breaks down below that trading range, that box I just gave you there, that's probably going to take it lower. Kava, CAVA, keeps bouncing off this support right here, ascending, broadening wedge pattern back there, breakdown. Norwegian, NCHL, Wing, which is Wingstop there. Paramount Global, just again, dead money. A lot of these entertainment companies are just cooked. LNW, Light and Wonder, I don't know what they are. EAT, Brinketer International, they own Chili's, Maggiano's Italian Grill, it's just wings. CHH, Choice Hotels, Shack, this is Shake Shack, looking very stretched right there. Nice looking short setup. Just needs to break that bearish rising wedge. You've got the nice negative divergences, and that should start the next downtrend for that stock. No different from this wedge right there. This one broke down, and the sector was probably carrying it higher for a little while after the breakdown, so we back tested for a few weeks. This is what I talk about on back test below uptrend lines. When you break, you can back test for a while. Then I like to see that red rejection candle. If you zoom in nice and tight, this is what I'm talking about right here. Finally get that nice big red rejection candle, and that kicked off the party. And from there, you drop, or this company dropped about 45%. SGS, Madison Square Gardens, SKYW, SkyWest. It peaked right here with the divergent high. It's kicked back, still below that high. CNK, Cinemark, MANU, Manchester United, right there. TripAdvisor, just lower. Actually, one of the better looking ones, just based on the big divergent low. MSGE, Madison Square Garden Entertainment Corp, and then SPHR, Sphere Entertainment. So that's it, guys. You get that's a nice one too right here. Nice little wedge. I like that one. All right, so you kind of get the idea of the sector. And then EATZ, if you want the restaurants, this is EATZ. I had it as a short trade for you back here. At the end of last year in December, we hit my first, then second, and then third target. As posted on the site at the time, all shorts to be covered, full long position on April 8th, or whatever that bottom was. And so that expected a reaction, and this one's come full circle now. So considered a new trade, considered it's certainly a new trade. There was enough cause there to go long and close shorts. So right now, again, the story is we've come full circle. We had a divergent high there. We had a nice correction. We had my first target, made a marginal new, just like the stock market, and still divergent high. Then came a much bigger drop. And now we've made, it simply extends. It's the same divergence. It's not a new high. It's an even bigger divergent high. The divergence just continues to build. When you see such big divergence on the daily charts, you want to look out and go to your weekly charts. You'll see it even better. So you go to the weekly time frame. There was that first divergent high. And again, it's not as if it didn't play out. We had a nice 21.5% drop in the sector. And this is simply an extension. Oh, no, I take... yeah, we did have it there on the weekly too. That was DH1. I just didn't have it marked up on the weekly. This is a much bigger divergent high, which tells me chances are the drop will be bigger than that next time around. And so where to? Yeah, I'd say maximum right here. I could see us coming down here, $22. We're at $30.95 right now. Call that $31. That'd give you about a 26% drop in the sector if and when hit. And last but not least, there's that BJK I mentioned. If you want to short the casinos and the likes, those type of companies, you have this ETF right here called BJK. That's the VanEck Vectors Gaming ETF. And it's at resistance, pretty good resistance. This is a level. I've had this line here. You can see created back on May 25th, 2018. I have not modified, touched, moved that trend line, look or that resistance level. And that was again back in 2018. We got to go back to the left of this chart, way back here. This is the end of 2019 right here. So there's a level that's acted as resistance on this sector numerous times since I first put it there, including here. It was resistance. We broke, had a little trading range above it, lost it again, big drop after we lost it, tried to rally back to it, rejected again off that level, tried to take it out here, 2 failed attempts, dropped there, and we're back to that level now. So all I can tell you, look, if we break it, then that's bullish. We go up to the next resistance level, 47. However, here's an uptrend line. This one does contain, be advised, we have a long trade on CHDN in this sector. We've already been able to book profits at 1 or 2 of those targets. I'm just going to run through this one for you, show you who's in there. You know, LVS, Las Vegas Sands, coming up and get some divergence. If it can turn down right now, if it pushes any higher, it's going to burn through these divergences. Just keep that in mind. But that's in there. DKNG, DraftKings, you can see, haven't marked this chart up or really most of these in a while, these individual stocks, but there's some support. It's kind of been a dead money trade for a while right here, sideways range. GLPI, Game and Leisure Properties. I don't have any opinion on that chart. WYNN, Wynn Resorts, nice resistance. Look at everywhere. This stock for years has been getting smacked down around this level. Very overbought. We could take it out, but we burned a lot of this stock has burned up a lot of fuel just to get up here. So if it does happen, I think the upside is going to be limited. And I think more than likely, if the market can give us those sell signals soon, these guys are going to correct pretty hard. MGM, clearly stock clearly in a downtrend right now, as you can see, since back here. LNW, Light and Wonder. There's our Churchill Downs. This is an example of, security selection, picking out the best looking stocks. We bought it right here at long-term support. We hit our first target here, had a pullback, then hit our second target, a little pullback so far. That's still the potential third target. I took full profits there. Just no reason to get greedy on this one, but I think it can possibly go up here. It will go up. It's still one of the better looking if the sector holds up. However, the risk rewards is not as attractive now. If you get another pullback to that uptrend line, maybe also consider your stop below that. So yeah, that was the original max stop on the trade. So, and that was what we hit on that one. About a 20% gainer. BYD, Boyd Gaming, starting to diverge here. If it turns down soon, that divergence will be confirmed on that marginal new high. Again, just like the stock market, a lot of stock, not a lot, yeah, quite a few making marginal new highs, but with negative divergence and overbought conditions. So those breakouts are likely to fail. Last time we had big divergence like that was right there. And then before that, we did have a divergent high right here. I didn't have this one marked up, but you can see I'm adding lines now. And there was your uptrend breakdown. Caesars, CZR, just dead money. Well, bear market stock, really. MLCO, starting to move up. We're coming off, it's a bottoming play, one of the better looking charts, big divergent low. So like I told you the other day, that's the longs I've been sharing. A lot of them are bottom picking stocks that, not that I highlighted this one. I don't have a position. I'm just looking at it now, but it's also at resistance as well. So I would not be chasing it here If anything, I'd be shorting it for a pullback, but I don't have a position. I'm not going to do it. BRSL, Bright Star Lottery, whatever that is. Gambling. Downtrend line, 200-day moving averages. So, it looks like a bullish setup. If you guys believe the market has a lot more upside this year, that's a good looking stock. We can all see things the way we want to, glass half empty or glass half full. If you're a glass half full guy or gal, then buy that breakout above the 200s, price resistance plus the downtrend line following this divergent low. Otherwise, what it is right now is stock in a bear market, and quite often in bear markets you will get these setups that look nice. Sometimes they even pop only to fail. All I can tell you is this stock peaked back here, almost a double top, a marginal slightly higher high, and it's been clearly in a downtrend since late 2023 right there when I put in that divergent high, which I did have marked up. Penn International Gambling, another just dead money. And that's the last of the sector. All right. I showed you the dollar, or no, I had another chart. I'm going to show it to you now. UUP. I also highlighted that. So this is the dollar. I just want to revisit this because I've been harping on this, and treasury bonds and crude oil as the three big things to watch for the stock market. And this one more for gold, really. And I just showed you Bitcoin. But this is that multi-year trading range. Again, it shows very well on this weekly chart. You can see it here. Long-term support, PPO poised to make a bullish crossover. I remain bullish on the dollar, expected to break out of this bullish falling wedge pattern. If so, that should be net headwind, meaning net bearish for gold, silver, and GDX. And I've given you targets. That's short trade and all that. But we need to break out of here. That is the measured target of the bullish falling wedge. You have the positive divergence. That is the same first target I gave you before. And we already hit it once. Remember, I got bullish back here on the dollar, expected that, gave you that first target there. We had a reaction pullback. That would take us back up to there again. And that would most likely put pressure on gold, silver, GDX. And here's GDX for you. I've been updating this one. It's kind of usually, you're just going to get more bang for your buck trading gold. The miners than you will on gold. We still are holding this level right here, this support level. If and when that goes, you're going to run down to this trend line. If and when that goes, which I expect will go down. Remember this last trade I gave you off that divergent high, we hit my first and second targets. Reversed high, my third had this marginal new and still divergent high. So that should take us down at least to my third target there, which is, if hit, going to give you a drop of about another 16% or so in the miners. Okay, I packed a lot in this video. Let's wrap it up there at the 42-minute mark. And that's it. We'll get it out to you. If you guys have any questions, feel free to post them in the comment section below. This has been Randy Finney with Right Side of the Chart.